Today's Animal Spirits is brought to you by our friends at YCharts. Every quarter, YCharts releases a top 10 visuals resource. It's packed with data and, of course, visuals to help advisors easily communicate complex investing topics with clients or prospects.
Okay, so YCharts is hosting a new webinar October 18th, kind of give a deep dive into visual deck. Topics ranging from the value of long-term investments to the art of crafting the right retirement portfolio allocation. All packaged in a convenient, editable, that's a tough word to say.
Editable, that does not roll off the tongue, that's right.
Editable slide deck that you could easily leverage during a meeting or conversation, which is probably the best part about visuals, is just being able to show people, explain them very easily. We have a link in the show notes to register for YCharts webinar to receive your own copy of the top 10 visuals for clients and prospects slide deck. And remember, 20% off, as always, if you tell them Animal Spirits sent you and sign up for your new subscription.
Welcome to Animal Spirits with Michael and Ben. I have to start the show, unfortunately, with a quick word on the events in Israel. I wrote this down because I don't want to go off the cuff. This is too important to have anything taken out of context or, potentially say anything I didn't mean to say. So here we go. All right. I know people don't come to our show for takes on such things, but it would feel callous to not acknowledge what happened over the weekend, especially as a Jewish person who, like most Jews, lost a lot of their ancestors in the Holocaust. I know that the Israel-Palestinian thing is super complicated, and I will not pretend to be an expert on the matter. But what those animals did, raping women, kidnapping children, and killing babies, is unconscionable and should make any human being sick to their stomach, regardless of any affiliation that you might have. Supporting the Palestinians and supporting what Hamas did over the weekend are two very, very different things. And to see people chanting "gas the Jews" in city streets and "death to Jews," forgive me if that scares me more than just a little. All right, that's all I want to say in the matter. Please, emails, don't send them. I know that this is a sensitive topic, but not interested in having a back and forth on this.
I think the one thing that this sort of brings up to me is just that if you're in a place where you don't have to worry about barbaric things like that happening, just count yourself lucky. It is kind of crazy that, I guess if you look back at the whole of human species, we're a very barbaric species at times, unfortunately. And obviously we haven't rooted all that out yet. And it's just, if you're lucky enough to not have to worry about stuff like that and you have to worry about stuff that doesn't really matter as bad as that, I think consider yourself lucky. That's
like what we talk about.
Yes. You're in a pretty privileged position if you don't have to worry about some of the crazy things that go on in this world.
All right. No easy way to segue to the show, but that's what we're going to do. All right, just another reminder that myself and a lot of the folks at Ritholtz Wealth Management are going to be in North Carolina during the first week of November. I think it's like November 7th is the Monday through the 8th. Is that right? Yeah, that's the 6th. Okay. We're going to be doing a live taping of the Compound and Friends. We're holding that in the NASCAR Hall of Fame, which should be a good time. So we'll have links in the show notes if you're interested in meeting us there. One more thing. I, along with our president, Jay Tinney, am going to be in Philadelphia on October, it's a Wednesday, 25th, at the Schwab Impact event. If you would like to meet up, shoot the breeze, as they say, you know where to find us.
You take the bus to Philly or the train?
I'm taking the train. So I planned on, I wasn't going to do an overnight. There's no need. It's only an hour and 20 minutes. But I was going to do dinner there. And you know what? It's opening night at the Garden. So I'll be in and out, shooting in and out. Take the 520, get to the Garden at 640, walk right in.
Credit to you for pivoting to the Knicks so quickly and just pretending the Giant season doesn't exist.
Yeah, they're dead to me. It's over.
All right. So last week we spent a lot of time talking about rising interest rates, and I wanted to put a little more meat on the bone there because a ton of people, we kept saying, like, we don't know why rates are rising. And a lot of people wrote in or commented and said, I know exactly why rates are rising. Here's the reason. And I think some of these theories are worth discussing. So like the bearish take, of course, the doomer take is, listen, debt is spiraling out of control and our politicians are crazy and constantly causing problems, and they're holding the country hostage every 45 days with the potential for government shutdown. That has to be it. It's the debt thing. And my rebuttal to that is, I mean, we've been the debt thing has been going crazy forever. What all of a sudden like flip the switch? Cullen Roche said, again, good theory. Why is the dollar index rising then? So he has a chart showing the U.S. dollar index rising. If this was the end of the U.S. empire as we know it, and the debt is out of control and people are losing faith, why is the dollar rising? You would expect the dollar to be crashing in that scenario. So
so we could dismiss that.
Yeah, I also think, like, I'll only believe the debt spiraling out of control thing if and when the Fed loses control, because the Fed sounds like they want rates to rise right now. And if I think that Jerome Powell could snap his fingers and cause rates to plummet if he said one sentence. If he said, listen, we're going to go buy treasuries, or interest rates would plummet. That's when I'd be worried if the Fed tried to bring interest rates down and they couldn't. That's when I'd say, okay, maybe it is the debt thing and maybe people are, it is kind of out of control. Other people have said supply and demand, there's too much debt. I do think that's part of it, that the Fed probably screwed up the treasury market when they went in to buy. And the same thing with the mortgage market. They bought a bunch of bonds, and when they got out, there was this vacuum created. That one makes sense to me. How about this? Now here's like the more Goldilocks take. And you always give me a little bit of shit for poking the bears, which is kind of fair, but I think that there's also a good reason for being more optimistic this time. Like 5 to 6% nominal GDP growth, if that's what we're in, is consistent with 5 to 6% 30-year treasury yields. Look at the table I put in here. I did a blog post on this. Average bond yields, average inflation yields, and average nominal GDP growth by decade. When inflation and growth has been higher, rates have been higher as well. So
wait, hold on. Break this down again. What are we looking at?
So this is average 10-year bond yields, average inflation rate, and average nominal GDP growth by decade, which is kind of funny. GDP growth is always on a real basis. It's the one thing that we always inflation adjust. Most other things we don't inflation adjust. No one ever really looks at nominal yield. I get why people do it, but so in the 90s, nominal GDP growth was almost 6%. Inflation was only 3%, and then bond yields were averaging 7%. Now, bond yields were coming down then. They're going up now. Maybe that's why people don't like it as much. But Matthew Klein, in his recent post at what does he call it, the overshoot? The right level of interest rates at any point in time.
Wait, hang on. Wait, could we just go back to your table? What's the takeaway here?
The takeaway is that if we are in a new regime of higher economic growth, then higher interest rates make sense in light of that. And it's not only bad news that rates are rising, because if rates are telling us that economic growth is going to be higher, then that's consistent. So here's Matthew Klein. His explanation is good. He said the right level, and he uses right in quotes, of interest rate at any point in time, to the extent there is such a thing, is merely a reflection of the underlying economic and financial conditions, where better conditions tend to correspond with higher rates. If we end up with 2% inflation, 2% real growth, and a 2% risk premium, then longer yields could be around 6%. So it seems like bad news for people who are borrowing, obviously, to have higher rates. But if those higher rates are commensurate with higher economic growth, then it actually makes sense. And I think that's probably good news.
Yeah, I just think the speed at which we arrived at this, quote, right level, that's the part that's alarming.
Yes, because the prices, that's the other component, is the prices for so many things, especially like the biggest things you borrow for, houses and cars, have not adjusted to the new level of rates, right? That those things aren't in line with one another. Where in the past, sure, rates were higher, but prices were the level of the ratio of prices was not as out of whack as it is now for cars and housing, which is the two biggest things people borrow for.
Yeah, because prices were already, putting the hurt on buyers, and those haven't come down at all. And so interest rates are just making everything very difficult.
Yes, but that's, if you wanted to put a positive spin on it, it would be, okay, the bond market is telling us growth is going to be higher, which we just haven't had to think about for a long time because growth has been so much. I mean, if you look at it, the nominal growth in the 2000s and 2010s was in the 4% range. What if it is 6% now and we have 3% inflation? That's a world in which higher rates should be higher. But can we handle that, I guess, is the big question. Callie Cox, regular on the show here. This is an issue. We talked about like the curve, yield curve. What did we land on? Steepening that we're going with, or uninverting? Disinverting?
I would say disinverting. Steepening is good.
Okay. So she shows the last times this has happened, the yield curve has steepened before, but it was only because the Fed cut rates. not the same situation right now. So I think really the bond market stuff really is kind of uncharted territory where
Hmm.
every time this happened in the past when the yield curve inverted, the only thing that made it not inverted anymore was the Fed cutting rates. And that's not
Right.
what happened. That's why I think it's so confusing right now.
Yeah, it is weird that the yield curve was inverted and the long end is being pushed up by, again, theories, but economic strength, higher for longer.
Yes, which is we've
Bizarre.
obviously never had that happen before, right? Where the yield curve inverted and then the economy kept getting stronger. So here's another one from Fed Woj here. Normally at the end of Fed tightening cycles, bonds rally. This time it's been different. Investors had priced in and are now pricing out recession with a quick turn towards rate cuts. So this shows 95, 2000, 2018, 2006. The change in 10-year yields from 6 months before to 12 months after a Fed rate increase. And this one is not followed script.
Another theory, although I don't know why, I'm sure this is there. Listen, all these theories, there's probably a lot of truth, right? It's hard to like divide the pie. Like, no, this is the main reason and this is only a minor reason. But a definite reason why is the amount of supply in the market. The treasury is still flooding the market with treasuries. And
Yes.
buyers aren't as eager. One of the big buyers of treasuries is Japan. And now for the first time in decades, their interest rates are going higher, significantly higher as well. I don't know what's driving their rates higher, but my point is having the local bonds as competition for US bonds, they're not buying our bonds in the same way that they once were.
It is kind of funny though that there was more demand for bonds when they were 1% or negative. Like look at I put this one from JP Morgan in here. I found this I was looking for a old blog post of mine and I found a post from like early 2021 and it was like investing in a world with no yield, which is kind of funny now. And it shows the breakdown of I can't remember when early 2021 developing market government bonds by yield. And look at the percentage. I think it was 30% were below zero and over 80% were below 1%.
Wild.
Not that long ago.
How much was there like 3 trillion in negative yielding debt?
It was a very high number, which is
Well, the good news is now that's only 1 trillion.
right. But that's my point is that people were clamoring for that debt now, and now it's like, well, it's a supply demand thing. I do think that the Fed getting in there in the treasury market really screwed up things when they dropped out and stopped buying bonds. I think that messed things up.
So, we, especially you, like to poke the bears. One of the things that they were saying was like the Fed is manipulating the bond market and distorting prices, which is clearly true. They were. There's just,
Right.
you cannot argue with the fact that what they were doing has had massive ramifications
let's be
for
honest, though.
everything.
Interest rates have always been manipulated. In the 50s, in the 40s, the government put a cap on rates because they wanted to finance the war. And guess what? There was huge inflation after the war, and the government still capped treasury rates so they could inflate away the debt.
What does that have to do with anything? You're saying like, look over there.
No, I'm saying rates have always been manipulated. People are saying like, oh, where's free markets? Markets were never free. That's my point, is that this stuff has always been manipulated. I think people have this idea in their head that like, if we just let free markets take hold, everything will be better. And like markets have never been free. That's my point.
I don't know. The Fed has always controlled the short end.
But I'm saying the government literally capped interest rates on the long end in the 1940s and 50s.
Okay, but but that doesn't mean that what they did over the last decade was unprecedented.
Yeah, no, I agree that they probably screwed things up for sure. And I just think it's funny though that there was so much demand when rates were low, and you'd think there'd be way more demand now that rates are higher.
Well, that's what I thought. I mean, the thing that I was most wrong about, I hesitate to say in my whole career because I've been wrong about many things, but I didn't see interest rates going. I didn't see the 10-year going much past 3%.
No, you would have assumed buyers would have stepped in because they've been so starved for yield.
Now, obviously, had you told me inflation would do what it did, I might have thought otherwise. But anyway, I thought that if rates got to a certain level, that there was going to be a tidal wave of buyers, like the "you shall not pass." Just give me all of that rate, and again, could not possibly have been more wrong on that one.
Bank of America did this thing where they go back to like the 1800s to show how this is the worst bond bear market in history. I know people are complaining about higher rates, but it's not a general freak out like it is with the stock market. I think Meb Faber put out a tweet last week saying like long-term government bonds are down 50%, why, if this happened to the stock market, people would be losing their minds. Why are they not doing it in bonds?
Two things. Number one is, by the way, that's a great point. That I saw somebody tweet this, that the crash in long-term bonds, it hasn't been a crash. It's been a slow bleed. It's not like there's been like down 6% day.
Right. We're talking like a 3-year slow, just, yeah.
So whereas in the stock market, you get panic because you'll get like the down 8% days and then just people freak out. You don't have that to cause freak out behavior, even though the decline is measurably the same. The other part of it is, you know that if you hold on long enough, now in this case, if you're down 55%, you're going to be waiting, I don't know, 10 years, whatever it is. You will get your money back. These are treasuries after all. Now, I'm not saying the losses aren't real until you sell. That's obviously not what I'm saying. But you know that at this point, you're in a better position than you were. It's easy to say 50% ago. I don't even sound like, trite here, but that's the reality of it.
The other thing is that not every bond investor is invested in long-term bonds. And here's the thing. You had an escape hatch. If you had because I know a lot of investors thought like long-term bonds are the best hedge. When the stock market goes down, people rush into long-term bonds and they are a great hedge. And so a lot of people had long-term bonds as like their safe part of their portfolio, even though they're more volatile. You had an escape hatch with 3% T-bill rates and 4% T-bill rates and then 5% T-bill rates. So if you have stayed in long-term bonds this whole time, you're down 50%, like you have no one to blame but yourself, because you had a better alternative with higher yields and less volatility that you could have gone into. So I think that's part of it. Is not everyone who is invested in fixed income, most of them are not invested solely in long-term bonds.
True. That's a good point. That's a really good point. It's not like TLT is 60% of anybody's portfolio.
Like when you're in the stock market, sure, there's defensive sectors that hold up better, but the stock market crashes, everyone feels that pain. You had an out in fixed income. I think.
Yeah. Also, your retirement is riding on stocks in a different way than it is long-term government bonds. Yes. So just different.
I made the point last week that I've never been a fan of investing in long-term bonds, and that was like a painful thing when long-term bonds were in this long bull market. But they've always been way too volatile for me to have it make sense to be in a portfolio when you already own stocks.
Yep. Fair enough. All right, Jeremy Schwartz with a good thread. Do rising treasury yields make stocks unattractive and too expensive? I mean, this is the crux of it, right? Like everything prices off of interest rates, mortgages, credit cards, stock market. Jeremy says the nominal equity risk premium comparing earnings yields to the 10-year treasury yield is at its lowest level in about 20 years. And the earnings yield is just the inverse of the PE. So that's what that is. However, stocks are real assets. So the more appropriate comparison is versus tips. Jeremy then says tips yield surging past 2.25% for the 10-year are providing some real alternatives, but okay. Sorry, let me just fast forward. Okay, a 5% earnings yield would double purchasing power in 14 years. A 3% equity risk premium versus tips is consistent with long-term 3% edge of stocks versus bonds. So I bungled the shit out of this, but the point, we'll put this in the show notes, but the point is that if you compare the equity risk premium using real rates, stocks do not appear dramatically expensive.
Now here's the thing. If you are a doomer person and you're saying inflation is going to be higher, you should be buying tips hand over fist right now. Tips are the real yield on tips of 2 to 3% is not only an amazing relative deal for the past 15 years or whatever, like relative to history of tips, which only goes back to like the mid 1990s. This is like an insane buying opportunity for tips if I've ever seen one.
You know what doesn't feel like happened over the last 3 years, although according to this chart from Bank of America, it did happen. Value has outperformed. Now, I don't know. So they're showing the value versus
what period?
They're showing value versus growth.
Okay.
3-year annualized return. And they said value wins again in the shift to a 5% world. Does it feel like value stocks have outperformed over the last 3 years?
No, because it felt like you had an 18-month window where they did, and then it just reverted. I'm doing the Russell 1000 growth and value right now.
What are you saying?
3 years. Yeah, okay. Over 3 years, the Russell 1000 value is up 30%. The Russell 1000 growth is up 24%. If you would have bet me on that one, I would have lost.
So not dramatic, but
Yes,
This is
but there
over 3
is.
years. Definitely not nothing. If you look at small value versus small growth, that's where the spread is.
So small value has been rocking. Okay.
Over the last 3 years, small value is up 31%. Small growth is down 5.5%.
I mean, I know that we've mashed together kind of a bubble with a bear market, but 3-year returns of up 30% is, considering everything that's been thrown at us, is pretty darn good in the stock market, correct?
Damn good.
If you measure that against all the headlines and all the economic data and everything that's been going on, interest rates rising, the Fed being so aggressive, and you got 30% over the past 3 years, that's a pretty good deal.
Damn good deal. All right, let's talk about the labor market. Last week was very odd. We had soft data out of ADP. I think estimates actual came in at like almost just barely over half the estimates. They were expecting to see like 150,000 jobs created, private payrolls, and it was 80, something like that. And then you got non-farm payrolls on Friday. Doubled expectations.
Blew it out of the water.
With inflation, wages not really rising that fast.
And look at this though. So wages, we're working on about, I don't know, 4 months worth of wages rising faster than inflation though. I really like this one that shows when wages are rising faster and when inflation is rising faster. And so, yeah, wage growth is coming in, but it's still above inflation, which I think is pretty good news. Heather Long.
Wait, Ben, that's a good point. We spent so much time, and when I say we, I mean people that write headlines, and I guess us to a certain extent, lamenting the fact that wage gains were happening, but not as quickly as price increases. And now we're going the other direction, and it's not like anybody's really celebrating it.
Yeah, no one really cares. Heather Long did the zoom out. 2.7 million more people are employed now versus a year ago. Wage growth a year ago was 5.1%. Now it's 4.2. Inflation was 8.2%. Now it's 3.7. She said almost no one predicted this good news story, which is true. So Jason Furman also, who's been relatively bearish on the economy, said like this could actually be quite good, this employment report. So I want to talk about finance brain when it comes to economic data like this, because the jobs report numbers were on the news on Friday at our house, and my wife goes, "Wait a minute, that sounds like pretty good news to me." Right? And I said, "Yeah, that's good news. More people have jobs and like the labor market remains very strong." She's like, so she's an occasional listener to the show, and she said, "Well, if this is good news and you say inflation is coming down, why are you and Michael talking recessions last week?" And honestly, I was like, "Well, because the economy's doing good, so the Fed's going to have to raise rates, and that could be bad." It's like, if you take the finance brain element out of it and you just looked at this on the face value, you say wages are rising faster than the inflation rate. The labor market remains very strong. Unemployment rate remains very low. Economic growth is as high as it's been since like the 90s. That sounds like all good to me. And then the finance brain has to come in and say, no, actually that's bad, because it means the Fed's going to have to throw us in a recession or something. If you look, you know what I'm saying? It's like, yes. I had a hard time explaining it to her. Like, no, the good news is actually bad news. That's how you have to think about it.
Well, because honey, the market is forward looking. So I like on Friday when we got that number and futures were lower, I thought to myself, you know what? I'd rather the stock market go down on good news, on good economic news in anticipation of rates staying higher for longer, than markets rally because we get a bomb of a report and the Fed is going to back off.
And then what happened? The numbers were good. The stock market sold off, and then it came back. It was like good news is good news for an afternoon.
But you agree? Good news, bad news being good news. Who roots for that?
Right. I am sympathetic to the fact that so many people have been like, so many economics people have been saying, why are people so unhappy? And we've talked about all these reasons for a while now. We've like dissected it a million different ways. CNN had this piece and it says, here's why this shockingly good jobs report is going to cost you. And it talks about, and it's all doom and gloom and bad news. And this person says we should never cheer a bad job market, but a job market that has remained this healthy for this long really isn't excellent news for average Americans struggling to pay their bills. And again, getting back to the inflation piece of the thing, I don't think people, at this point, it's been going on for so long, no one wants to view.
I'm sorry, off with this headline. Seriously.
Right? It's like that. That's just,
I don't, you know what this is? This is please click on my article because that's how I get paid.
Yes. This is the stuff where it's like, yes, there are legitimate reasons why people haven't been celebrating the economy, but like trying to like take actual good news and then spin it so it's bad is I can't stand that.
Maybe people are nervous because we keep saying a recession is coming, and that's giving them angst. How about that?
Yes. Well, yeah, people have been talking about it for 24 months now, 18 months.
All right, just back to the jobs report. So remember this chart that we spoke a lot about in 21 and 22, that the best way to get a raise was to change your job, right? So they showed the change in annual pay versus job stayers versus job changers. The job changers wage growth has completely rolled over, and job stayers is as well. So the average hourly earnings was up 0.2% month over month. That's the lowest in at least a year, and down to 4.15% year over year.
The spread that it got to, that was crazy that at one point you were getting 15 or 16% wage growth for people who are changing jobs.
Yeah, pretty wild. This article from the Journal about older people spending, I thought was really interesting, and another example of, you see the headlines, you think about interest rates, why aren't they impacting spending? Why aren't they impacting the economy? You probably wouldn't have thought that there are more older people relative to the population than there ever have been before. So 65 years or older, it's 17.7% of the population. It was 13% in 2010. So it's the highest on record going back to 1920. Okay. And their behavior has changed dramatically post-COVID. A lot more of them are retired. A lot more of them are saying, you know what? I've spent my entire life saving. It's now time to enjoy myself. And that is impacting consumer spending dramatically, given that they're, again, 18% of the population. And if you just looked at interest rates, you never would have thought about that.
The Wall Street Journal has been all over the consumer spending stuff these past few months and years. And this one is, yeah, it's great. The chart that shows the 65 and older share of consumer spending just going up and to the right, like a long-term stock market, it is crazy. So what is it? 22% of spending last year, up 15% from 2010. They have a few YOLO things in here, like all my life, it was save for this, save for that, said Maureen Green, 66 of Cape Cod, Massachusetts. Now that there's money in the bank and I'm spending it in ways that bring me closer to my friends and family than I did before.
Good.
Yeah, and she said she's spending 25% more than she did in pre-pandemic. I do think there is something to that. The boomers, a lot of people probably had some friends die or my parents are getting up there in age and they're starting to have friends get some really bad health problems. Like all the time I hear, this person has this wrong with them and this person we have to visit in the hospital. And I think there's something to that of.
Absolutely. Absolutely. The average household led by someone age 65 and older spent 2.7% more last year than in 2021, even adjusted for inflation.
So they have the most wealth. What's the number? Like 40% of all mortgages are paid off. That's mostly boomers. They have a ton of equity in their home. They're going to spend the money and they're probably going to say, screw the kids and grandkids with their inheritance. Let's enjoy this a little bit. Most of them, some of them are, it sounds like.
American Cruise Lines, which gears its cruises towards older consumers, said it is seeing double-digit sales growth this year, driven largely by boomers. So
long cruise ship thesis here? Over the next 20 years, it's going to be all boomers taking cruises?
I mean, cruises have done very well this year. Here's the quote from an economist. Our large share of older consumers provides a consumption base in times like today, when job growth slows, interest rates rise, and student debt loan repayments begin again.
Is there a cruise ETF?
I don't think so. Oh, wow.
Oh, there's a hotel, airline, and cruise.
Yeah, Jets is the ETF for airlines.
So there's a cruise, CRUZ, which is hotel, airline, and cruise ETF.
It's had a pretty healthy pullback.
Yeah, it's up 13% year to date. So it's not like killing it.
You know what's interesting? These things are still well below their 2021 highs.
Right? Because they got killed, right?
So let's see. Carnival, for example. Even after the rally, Carnival's in an 82% drawdown. Royal is down, not as bad, down 33%. What's Norwegian? Norwegian is down also 73% from its high. Yeah, so a lot of pain in these stocks.
I'm surprised that with Carnival down 80 or 90%, there hasn't been some consolidation in this industry. You'd think it would make sense, right? Because they all have their ports and their ships and stuff. You'd think Royal Caribbean would buy Carnival or something like that.
Maybe Tom Wham-Gams. What the hell was his name?
Yeah. That's right. He was head of cruises.
Duncan shared this with us from last week. Do you think there was a poll 3,000 votes. Do you think the U.S. will have a recession in 2024? 63% said yes. And unfortunately, I'm in that 63%. But I'm only 51% confident.
All right. I'm 63% sure that it's going to be a second half story too. How about that? If we're putting a time frame on it. I don't know. All right. More about bonds. Eric Balchunas says the Fed fight has transformed bond ETFs into cash incinerators. So the top 3 cash incinerators, meaning the money you've bought in versus the money that's been lost to investors. Vanguard Total Bond Market ETF, which is, I think, the biggest bond market there is. The AG, and then 20-plus year Treasury. Based on what they've brought in for flows versus their losses, are the top 3 cash incinerators.
I've always said that Vanguard was destroying Americans' wealth.
It is. But the thing is, I know people always say, like, investors, the stock market is the only place where stuff goes on sale and investors run out the door. People are running in to buy treasury bonds right now as they're crashing and yields are going higher, which I think, if I'm trying to nail the bottom in long-term treasuries, again, that's not my sandbox. I don't want to play there. But the behavior of people rushing in to buy in a crash is actual rational behavior for once. Like people always say, oh, investors are the worst. They do the opposite when they should. This is the opposite of that. People are rushing in to buy when prices are down, which makes sense, correct?
Yes.
Buy when there's yields in the street.
But people keep selling stocks. This surprised me. U.S. stock mutual and ETFs, so mutual funds and ETFs, are on track to record outflows for 11 consecutive months, the longest streak since a stretch ending in March 2020. Thoughts?
Buying bonds, selling stocks. I'm going to go back and blame the boomers for this again. Fair? Like instead of 60-40, in the last 10 years, we've overweight to 80-20 or 70-30. Now we're going back to...
I think that's actually precisely right. I would love to have a breakdown of age in this type of, like we did with consumer spending, but I think that's absolutely right. Remember like eggflation, beeflation?
Oh, yeah. Lots of flations.
A lot of flations. So UN Food and Agricultural World Food Price Index definitely stopped going up. Not just like year over year. I mean, the actual level.
Right. It's crashed.
Prices are coming back down.
Right. And this was a huge, huge spike too. Wow. That's a surprising chart.
Remember corn prices and in February 22? It was corn, wheat.
Remember we talked to Sal from Tucrium about how his whole thing about agriculture was people find a way. They're going to be like when prices go up, farmers will plant as much on their land as they can. And I think that's probably what happened. Because remember, there's all those crazy stats of like the Ukraine produces 30% of the wheat in the world or whatever it is. And people are saying that there's going to be, people are going to run out of bread. And the fact that we didn't have disruptions is pretty crazy. Prices went up, but then they crashed right back down.
Speaking of corn, I took the boys pumpkin picking yesterday. And Kobe and I went into a corn maze. I'm never doing that again. It was awful.
Did you get lost?
I couldn't figure out a way out. It wasn't even fun. Like it was
walk
stressful.
Through the corn. Just walk right through the corn.
Thought about that, but I picked up I opened like my Google Maps, and you could see the maze from the sky, which is kind of neat, but it wasn't precise.
Wait, you did a Google Maps in the corn maze?
Yes, it wasn't precise enough to get us out. We were in there for like I think like 50 minutes.
So I thought we did the pumpkin picking thing this weekend too, and there's a corn maze. We actually didn't do it. But all this other stuff.
Smart.
We didn't do it. You could feed the ant. They had the petting zoo, and they had all this stuff. And we have 5 or 6 of those farms around us, and it just got me thinking that it's so funny to me that this is how farms make money now, through millennial parents and people who want to post pictures on Instagram and go pumpkin picking. Because we could have bought a pumpkin at our local store, right? As we were walking out of the store, but you wanted to go to the pumpkin patch to do it. And all these places, these farms are doing so well, or they're seemingly doing well because they're like building these new, like these huge new restaurants and areas and to shop, and like they're all expanding. And it's just funny to me.
How much did your pumpkin picking experience cost you?
Actually, I mean, it wasn't that much. I don't know, $60 for some candy apples and pumpkins.
So ours was $60 to get in. It was $15 a ticket.
Oh, see, we didn't have to pay to get in.
And then we had to pay, I paid $20 to get stuck in a corn maze for an hour. We spent $30 on pumpkins. And then
So you have to pay to get into the place and then pay extra for the corn maze?
Oh yeah. And then we had to
Jeez.
pay, Robin got like some popcorn and waters and whatnot. We've always spent $120.
Okay, yeah. Corn maze was free for us. But it's what's the number? Like in the 1800s, 80% of the labor market worked in farms. And it's just funny to me that farms now, yes, they still serve a purpose, but now it's for millennials to do something with their kids on Saturday. And that's how they're making money. All right. We talked about Michael Lewis last week. I decided like enough with the interviews and stuff. I just have to read the book. So this weekend,
you're a source guy.
I read the book, and my initial takeaway is that I'm not mad, just disappointed. And I think the reason the reviews are so bad is because this could have been an awesome book. It could have been really, really good. And I honestly think that he had this idea in his mind of it's the underdog story, and I'm going the underdog story. And then the stuff came to light about the fraud, and I think he just couldn't. He tried to put some stuff at the end about it. I think he just couldn't turn it around enough. And I just think that he liked him too much. I think the stuff that I did get out of the book, like I wouldn't recommend reading it, really. If you've read a lot of the stuff, I don't know if the only new stuff I really got out of it, that he was much more of like an alien than I thought. Like he seems like he was an alien sent to Earth to learn human emotions.
Right.
And that's the thread that Michael Lewis almost didn't pull off on. He talked about how he realized that he had to like smile. He had to like force himself to smile. It wasn't just that he didn't have empathy. He didn't like have happiness in his life.
He had to like practice smiling in the mirror.
He had to like practice human emotions. And the thing to me, he could have easily been a serial killer or the person who committed fraud on this scale and like made billions of dollars, because he was so robotic. And that part to me was the biggest. But the thing is, the thread there was, okay, he learned how to like have these human emotions to get people to like him, because the effective altruism stuff was all bullshit. He just wanted people to like him. Obviously, the next leap forward would have been, okay, that's how he committed fraud too, because he could trick people. He learned how to trick people, and he didn't make that leap. I don't know. Lewis wrote the Kahneman Tversky book, and I think my biggest takeaway here is that human nature is just undefeated. That like even studying the behavioral stuff doesn't shy you away from like your own blind spots and human nature stuff. So it wasn't like I didn't come away being like Michael Lewis is a fraud. Everything he did before this, I think he just is a guy who really, really likes underdog stories, and he wanted to write another one. And that his character he chose was this like totally out there person, and that's the story he wanted to stick with. And I think he just said, you know what, screw it, I'm sticking with the underdog story. That's what I'm doing. So I didn't come away saying like Michael Lewis was in the bag for him. I think he liked the guy. I think that's as much as what happened. So I don't know. I would say it's like, I don't know. It wasn't like a page turner either. It was kind of hard to get through.
I'm skipping it. Thank you for that.
I think I wouldn't read it. Okay. So I wanted to fact check a little bit from last week. We talked about how there's not that many homes being sold, and I said it's more than you think. And you said, no, it's all new homes. So I'm fact-checking us here because I didn't know. So I reached out to Logan Motoshami on this. So I said, like, how many houses have sold? And I actually found it on YCharts. U.S. existing home sales for the past 12 months. That's how to read this chart. It's crashed, right? It was above 6 million for a while, but it's only back to like 2009, 2010 levels, which doesn't sound great because that's a bottom of a real estate bear market. But 4 million homes in the last 12 months have sold, existing homes.
Wait, are you using this chart to support the fact that people are selling homes? Because this does not do it.
Yes, but look at the next chart. U.S. single-family new houses sold, 675,000. That's my point, is that like there are still existing houses turning over more than new houses. So yes, it's about as low as it's been, but I don't know, 4 million out of 160 million or so households is there's still activity happening, even though it's way lower than it should be.
Well, I brought charts too.
All right.
The mortgage purchase index. Does this look like there's activity going on or not? Because this is basically I don't know. I don't know when did this chart start. I can't really say. Is this early 90s? The mortgage purchase index is basically as low as it's been over the last 30 plus years.
we talked to a friend in recent weeks who works in a loan department, and it sounds like they work on commission. And like, if you're in that situation, how bleak does the world seem to you? From years and years of refinancing activity and house sales and all this stuff, because even if rates drop from 7.5 to 6 or 5, sure, there's probably going to be some more demand there's going to be more activity in the housing market, but you're not going to get a huge flood of refinancings at that point. I think that the whole loan industry was living off of refinancing activity for years, right? And that's just not going to come back for a long, long time. Maybe ever to what it was at the peak.
Yeah. Yeah, it's rough.
All right. So here's the something's got to give in the housing market that we talked about with inflation. So this is Lance Lambert from Black Knight. To get back to pre-pandemic housing affordability, one of the 3 things would have to happen. U.S. income spike 55%, home prices fall 35%, or mortgage rates fall 4%. So that'd be get back to 3.5%.
You know, whenever you say something has to give, no. That's when you
Right.
know that nothing will give, and whatever you think has to turn will not, in fact, turn.
But out of all these 3 things, the only one that would make sense to me would be mortgage rates. But at that point, housing prices probably, if mortgage rates fell back to 3.5%,
home prices gained 35%.
Right? Yeah. So this is something's got to give. But to your point, it's probably never going to give.
Ben, a couple of weeks ago, we spoke about the fact that a lot of companies are raising funds to purchase or provide liquidity to private equity funds. Jason Zweig tweeted, if someone asks you to define chutzpah, you no longer need to say, quote, like when a guy who killed his parents asks for clemency because he's an orphan. You can say, quote, like private equity providing loan shark liquidity to investors in illiquid PE funds. Well said.
If you ask me to spell chutzpah, not a chance. Right? But
Yeah.
yes, the thing is, I was talking about private equity being in trouble like 7 years ago. And somehow I think because they have the illiquidity in the really long time horizon for their funds, I think they can just kind of tread water. And you don't really see the bad stuff trickles in. It's not like a stock market crash. I think they're able to push things out and push the bad news out and spread it out so much that it doesn't seem as bad as it really is in a lot of cases.
Yeah, the bad news, like, you know, vintages from 2017, like they'll start coming in slowly.
Right, but it takes a while. You don't see it right away.
All right, here's an interesting survey from Redfin. 59% of recent home buyers say purchasing a house is more stressful than dating. Of course it is. Who did the 41%?
Yeah, if they had Tinder for houses, if you could just match up to a house by swiping left or right, that'd be way easier. Do you think that dating is like 10 times easier these days with the apps, or is it harder?
I don't know. You know, perspective, I guess, is important here. Speaking of that and real estate, I'm
just glad I didn't have to go through the app dating phase.
Yeah,
I don't think I would have not liked that.
I think I might have enjoyed it, even though I'm not very social. I don't know. Who's to say?
I think if you did it, though, let's say you were single, Robin dies in a plane accident. Sorry, Robin.
Jeez.
Do we put up the picture with you with your hair, though? And then you show up to the date and you're bald? Is that how we play it?
I'm proud to be bald. I'd roll with it.
That's true.
I've spoken over the years about the way that my town is set up. Houses are on top of each other. I'm looking out my window right now. My neighbor is, I don't know if that's 15 feet. Doesn't look like it. Maybe it is. Houses are on top of each other. Everything's very densely populated here. And somebody was talking to me, somebody who moved to Long Island was talking about maybe living in this place or that place. And they went to, I think it was Jersey they were talking about. And I've thought, like, man, it would kind of be nice to have like more land, you know, to not have my neighbor yell at me when I light a fire in the backyard. That would be nice. But then this never occurred to me until they mentioned it. They said that this place that they were looking at was a non-starter because the houses were like almost too remote. Now, this is hardly rural areas, but it's your neighbor might have been, I don't know, 100 feet away from you. And if you wanted to go to the supermarket or the bagel store, you have to drive, 15, 20 minutes. And it never occurred to me like, huh. Yeah, I don't know if that sounds so great. I don't know. Maybe it is. I guess in the back of my mind, I always thought that would be appealing to me. But
I agree. Having like the land and being so secluded, especially with kids, I think you want to be in like a more neighborhood setting.
Yeah. Again, it always sounded nice to me. But then when they said it, I was like, I never even thought about that. Yeah, it is kind of nice having neighbors, even though they yell at me about my fire.
You know where the best of both worlds is? We live in a neighborhood in the Midwest, but you have more room.
Yeah, that's probably the sweet spot. It's like, yeah, I would like neighbors, but could they be like, I don't know, 20 feet away from me?
Right.
Do I need to have the rascals like banging on my door? Could Kobe and Logan play every afternoon at 4:00? Probably not. But maybe there's something nice about it. All right, Ben, we rolled our 401k over to Fidelity. And when I say we, I mean us and our colleagues at Ritholtz Wealth Management.
I never realized they had like the website like my401k.com. Something like that, right?
Oh, is that it?
Something 401k.com?
I mean, Fidelity is the biggest 401k platform in the world, I think, right?
Yeah. If you type in 401k.com, it brings you to Fidelity. That's a pretty good get.
There we go. Okay. So I tried to log on and it said like you already have a login, like create a new one or something. So I entered my social, whatever. And Mass Mutual, my former employer. So I was like, do I have a 401k from Mass Mutual? That's news to me. I don't remember making any money. So I clicked on something, I don't know, career earnings or whatever. And in 2009, I made not to brag, I made $4,919.39.
And how long did you work for them? The whole year?
The whole year. And then in 2010, I followed up with a banger, $253.16.
So what do you have, like $300 in a 401k there?
Not bad. No, Ben, that was my total earnings.
I know.
That was my total earnings for the year. Now, you might say, well, how the hell did you live on $4,900? Well, I didn't. My eyeball, my eyeball was twitching for like 10 months. I was under such stress and I don't think I really realized it. I guess it was manifesting physically with my eyeball twitching. But I worked. So when I got,
so that's 100% commission job, obviously.
Worse. I had to
pay them.
I had to pay rent. So you can imagine me. I was a balding doofus with longish hair, slicked back and balding, wearing a suit that didn't fit, and shoes and a tie every day to cold call. So how did I even like live? So when I was dismissed from college, I came home and I was a full-time waiter, like 6 days a week full-time. So I had nothing else to do. Now, it wasn't a great time to be a waiter, given that it was 2007 and 8 and it was a recession, but it was good enough for a kid that worked 6 days a week. So I probably saved I saved a lot of money. I worked there for like 2.5 years, 6 days a week, like literally 6 days a week because I had nothing else to do. None of my friends were home. So I saved maybe 30 grand, maybe 40, something like that. And I lived at home. And so that's how I was able to, make
so you were the millennial living at home.
God, those were not my best years, let's just say.
I saw this thing in here about qualified total pay, and I was like, what is this? So those are your paychecks.
Those are my paychecks.
Did you find money in the 401k? It was like $100 in it?
No, there was nothing.
Okay.
There was nothing. And then, anyway. All right, stick with personal.
Is this before or after you talked about changing your mind about the Cavs and the Magic in the playoffs?
This was probably right before.
Okay.
I mean, I was definitely confident in my assertions. Man. Hey, adversity and everything like that. Okay.
That's true.
So The Atlantic has an article.
This is though why you can never plan your career path out. Like if you would have told yourself back then, you're going to do this and this isn't going to work out and this isn't going to work out and this isn't going to work out, but someday this is going to work out. You would have said, no way, it is not. Right? Like I had so many jobs back in the day that I just didn't get. And every time I was just heartbroken. Like, why didn't this one work out? Why didn't that one work out? And you never realize, like, sometimes not getting the job you want is, like, the best thing that can happen.
Dude, I almost moved to San Antonio to be an internal wholesaler. And
That would've been tough.
the only reason why
Good river walk there.
the only reason why I didn't go was because my mom was dying, and if she was healthy, I would have gone to San Antonio. Can you imagine?
How many of those forks in the road in your life have there been? That's like the luck stuff I'm always talking
Who
about.
moves to San Antonio to be an internal wholesaler? This asshole.
Yeah. You would turn into a cowboy, maybe.
Airlines are just banks now. I'm picturing myself with cowboy boots.
Yeah, I could see it.
They make more money from mileage programs than from flying planes. Okay, so this is interesting.
Wait, how?
Listen, consumers now charge nearly 1% of U.S. GDP to Delta's Amex card.
Holy crap.
So that's $268 billion is 1% of GDP. So $268 billion is swiped on the Amex Delta card. Pretty wild. Delta obviously does not make hundreds of billions of dollars in credit cards. In January, they reported, by the way, I own Delta, the stock. The company reported it received around $5.5 billion in 2022 through its Amex partnership. And there was some hemming and hawing because they tried to change like the mileage and the rewards. So Delta has...
They said they're not... I saw a couple weeks ago, they're not going to let as many people into the lounges anymore.
It's overrun.
Whenever I flew last time, there was a line like halfway down the airport to get in. I'm like, why would anyone want to get in there?
That's why you got to go to the exclusive one. But even that, they're raising it still. So Delta reports it has 25 million active members in its Sky Miles program. 25 million. 30% of them carry Delta affiliated credit cards. So yeah, everyone's doing it. And now there's some sort of, there's people getting pissed.
So you're going really contrarian lately. You're buying Delta. You're thinking about cruise ships. You're buying utilities.
I'm not buying cruise ships.
No, you said you're thinking about it. But
no,
you're going.
No.
You're going.
I have no interest in cruises. None whatsoever.
You're on a contrarian play though here. Contrarian run lately.
Yeah. Listen, this is why I don't bet big, because I know that my natural instincts are losing trades, right? And so for me, it's a hobby. It's a game. It's fun. It keeps me stimulated. And I love it, even though I'm not good at it, which is why every 2 weeks, in my 401k, boom, and in my taxable brokerage account, boom.
Speaking of 401k, by the time this is from Wall Street Journal, a Vanguard study says that by the time older millennials reach median retirement age, they'll be able to replace 60% of pre-retirement income with Social Security and savings from sources including 401k and individual retirement accounts. Gen Xers and the youngest baby boomers, by contrast, are likely to replace about half. And they say, well, why are millennials doing so much better for retirement? What changed? 401ks, they became automatic. They had this guy from Kenneth Adams, 34. I wasn't thinking about retirement at all, said the Austin, Texas resident. They sent me this letter saying they were going to auto-enroll me, and I said, okay, I'll do what it says to do. He's increased it over time. He now puts in 12% and has an emergency fund. So the auto-enrollment feature is going to save so many butts in retirement, I think, for people who have a 401k, that I always talk about Social Security being the biggest retirement program ever. I think in the future, auto-enrollment into 401ks is going to be an even bigger net positive for most workers that have the ability to do it.
It's so funny. It sounds so dumb, right? Like,
yes,
it's such a simple sort of thing.
You have to opt out instead of opt in, and that saves people, right?
Massive ramifications. This guy says, it's almost comedy, like how big of a deal this was. Just a simple change.
It's that simple as like take the choice out of it.
Unbelievable. All right. Last week we had Kaplan Schweizer sponsor the show, and we actually got a decent amount of feedback from CFA enrollees. CFA, what do we call them? Aspirational CFA charter holders.
Oh, okay.
I forget what the proper term is. Candidates. Boom. Candidates.
There you go.
My God. It's fun getting old, right? You just can't think of words anymore. Just basic words.
Mm-hmm.
All right. Hi, Michael and Ben. Longtime listener of the pod and TCAF, very timely ad with Kaplan for CFA study materials. I'm currently waiting for level 2 results that are coming out in October. I passed level 1 in December 2019, and then COVID threw a big wrench in my study plans. A big part of why I started the CFA program was to switch career fields. I've switched jobs twice and we've got fast forward 4 years. I'm wondering if it's even worth it if I fail level 2 to sit for the exam again with the advancements in AI. I think I've seen ChatGPT pass level 1. I think certifications will always hold weight, but from a more practical standpoint, would it be more advantageous for me to just master AI? I think it's an interesting question. Now,
I know ChatGPT has taken the CFA.
I would have said, prior to the AI angle that this person is coming with, that the CFA charter holder or the CFA certificate is for people that are either analysts, right, at an investment bank, or portfolio managers.
Or it is aspiring really, portfolio managers.
It's really not for people that are looking to get into wealth management. That's not the test to get into wealth management. If you love one of those two fields and being an analyst or a portfolio manager, then yeah, it's probably required. Now, to the AI part of it, I don't know that AI is going to make human analysis less valuable. I'm sure, yeah, I guess it probably is. That makes sense. But I would say, like, forget about the AI part of it. If you are not in love with the idea of being an analyst at a bank or buy side somewhere, then don't do it.
Or sell side, yeah. If you want to find a job in portfolio management, getting the CFA charter holder is not going to make you a better investor, but it will make you more appealing to prospective employers. That's the way I look at it. And I don't know, if AI tools are going to be so great, like eventually everyone will use them. And sure, some people have better tools than others, but I don't think AI is going to help you find a job better than the CFA. Unless you can have AI write like a good cover letter and resume for you. I don't know.
All right, one more email. Subject, prepared foods. Dear Animal Spirits, in the last show, Michael inquired into how fresh prepared foods at grocery stores were. I'm a manager of a prepared foods department of a high-end grocer, and I think I can help answer that question. In our chef's case, which is what they call the cold, fully cooked behind the glass. Ben, you don't know about this apparently. We are required to throw away most foods on the sixth day.
There's a lot of different kinds of prepared foods. That's all I'm saying.
We are required to throw away most foods on the sixth day after it is made. In reality, we try and cook 2 batches a week of each item, so it usually is more like 4 days at the longest. Okay. At the end of the day, we would always put quality first, and I would never sell to an... At first, I was a little sad that Ben didn't know what prepared foods are. But to be honest, I never really ate prepared foods before I worked in the industry. I'm a huge fan of the show.
Here's the thing. At my grocery store, there's prepared foods. There's a buffet, but there's also the meats that have been prepared and seasoned already. And then there's 4 different kinds of prepared foods. I didn't know which one you were talking about. There's a buffet that's ready to go.
Fair.
Then there's the prepared foods that they heat up for you.
Okay.
And then there's the ones that are already heated up. And then there's the meats that you can cook yourself that are prepared.
Do you cook? I don't know if you ever... I'm guessing you don't.
I'm not a cook at all. No way.
So what do you guys...
My wife is a good cook. I'm not a cook.
Does she cook or are you guys order inners?
We do more ordering out now, but she's a good cook. She can cook. Like the kids last night wanted to make chocolate chip banana muffins, and my wife knows how to do that. Yeah.
That's skill.
She's good
baking.
She's good baking it too.
All right, recommendations. I saw 10. Not a joke. I did it. And they had a trailer for The Marvels, which is, I guess, a sequel to Miss Marvel. And I am a sucker for a trailer. It's very rare that I see a trailer that I'm like, that looks bad.
You mentioned this a couple weeks ago. I've said this in the past. I would watch a channel that's all trailers, but not just new ones, historical trailers.
Yeah, trailers are great. It's like
just play trailers all the time.
Of the best of. So I am generally either like, or that looks awesome. And rarely you see something that looks just terrible like Aquaman. Well, I'm here to tell you that The Marvels looks maybe even worse than Aquaman. And it's really sad what's happened to Marvel and DC. I'm just out. Somebody asked me if I'm watching Loki season 2. Nope. No interest.
I think they need to go smaller and just do like a Marvel rom-com. Like they need to do something where it's not the world's going to come to an end. They need to go smaller. So wait, did you like Saw or not?
So I made this chart of Rotten Tomatoes reviews, both from the critics and the audience for Saw. And the reason why I saw Saw 10 was because it's the only Saw where the critics scored it higher than a 50. Even the first one, which is egregious. First one was great. Critics gave it a 49. So the critics gave this one like an 80. So I did see it. And Tobin Bell, who plays Jigsaw, was really prominently featured in the movie. And it was a good Saw. Was it a good movie? Like, yeah, probably not. But was it a good Saw? Yeah, I had a good time. It was hard to watch and
Didn't he have cancer in like the very first movie though?
So this is a sequel between. This is supposed to be between the first and the second movie.
Oh, okay. So they went backwards. All right.
Yeah. So then I came home and I was like, you know what? Let me fire up Spiral, the Chris Rock one from last year. By the way, Saw was like they made one. It was 2004, then 05, then 06, then 07, then 08, then 09, then 010. They made one every year for 6 years.
I love how one of them's called The Final Chapter. Then they made 3 more.
Yeah, that's pretty funny. So anyway, so I dialed up Spiral, which was with Chris Rock.
Now, back when you were making $4,900 a year selling insurance, did you ever think you'd be making a bar chart of Saw movies? Right?
What's in an hour? Is it fractions of a penny? Probably, right? Anyway.
Yes.
Yeah, good times. So I have to say, and it pains me to say that I think Chris Rock is one of the worst actors I've ever seen. I close my eyes. I close my eyes, and no, he doesn't even. It sounded like he was reading. He's horrendous, and the movie was truly repugnant.
They've tried to make him a movie star over the years. It's never really worked. The one of him for Fargo, the TV show, wasn't very good either. That was the worst season of Fargo.
The only good Chris Rock role, and I would have to fact check this, but is New Jack City.
It's probably fair. Yeah, some of the early stuff he did was probably the best in like the 80s and 90s.
So it's Halloween season, which means that I am even more in my horror movie mode than normal because on all
it's Halloween season for you all the time.
Yeah, but on the streaming channels it says like, Huluween or
like we watched Hocus Pocus 1 and 2 this weekend with the kids.
So I watched The Boogeyman, which is, very skippable. Not great. But I do have a recommendation, an actual recommendation. If you like horror movies. And this is not so much horror, it's not like a slasher or anything, but it was interesting and well done. Movie called The Empty Man. Now, when I see a movie like this, Chris Ryan and Sean Fennessy were talking about it. They did like a horror movie, like Oscar type thing from the last 4 years, and they mentioned this. So I went back, and Adam Neiman they did like an hour on this movie in 2020 when it came out, and it sort of got swept under the rug because it was during COVID. It was like I don't know, very interesting movie, worth watching.
Okay, you need some sort of scale with your horror movies because I can't tell between like it's a good bad one, or it's a bad one.
No. The Empty Man is like legitimately interesting. I would say like. It's a little too long, but like 7.6, like that might be high. 7.4. It's worth watching if you like the genre. It was interesting.
There's no good new TV shows on right now at all.
Nothing.
Wrexham, maybe. I mean, there's nothing. So we're watching the morning show still. It's on the 3rd season. If you would have like compared this when it came out to Succession, you'd go, "Oh, this show's good." Apple's spending a ton of money. Jennifer Aniston is in it. Reese Witherspoon, Steve Carell, one of the Duplass brothers, about 8 other people that you know from other stuff.
I feel like it lost momentum.
It was never good from the beginning. It's always been ridiculous, but the 3rd season has like gone over the top of this ridiculous. John Hamm joined to play like an Elon Musk kind of guy, and I can't look away. But it's hard because Billy Crudup is actually the best character probably, and he's supposed to be the most unlikable.
I like that guy.
He's really good in it, but the plot lines are so ridiculous. I was laughing out loud by the end of the last episode, but I can't stop watching. It's just it's like the most ridiculous show on TV, and I think it's one of these other things, like if you've been rich and powerful for long enough, like Jennifer Aniston and Reese Witherspoon and some of these people who are like producing the show, like I don't think you have enough self-awareness to be like, oh wait, this is ridiculous.
One day, Ben, people are going to say that about you. You use that card a lot.
It's true. It's true. That's why I've never been rich and powerful enough to use that card. So we also rewatched last night True Romance. Probably haven't seen it in 20 years.
Flawless.
Maybe one of the best casts ever. If we're talking 90s movies, Christian Slater, Patricia Arquette, Christopher Walken, Dennis Hopper, Samuel L. Jackson, Gary Oldman, Brad Pitt, Michael Rappaport, Tom Sizemore, James Gandolfini, Val Kilmer, Elski Bartakamus, and like 7 other bad guys.
Doesn't get better.
It is so 90s though. And watching it now, like there's so much of the stuff that they said in it that they couldn't say anymore or probably wouldn't say anymore.
Chris Penn? I don't know if you mentioned
him. Yeah. But just like the most 90s movie of all time. And then just seeing all these actors like that you know really well playing like a 5-minute role is kind of insane. Gary Oldman as a drug dealer.
If you haven't seen True Romance, like please fix that.
The funny thing is Christian Slater is probably the least likable character of all, and he's the star of the movie. There's so many good characters in this movie.
What's his name in the movie?
Oh, I can't remember. Clarence.
Clarence.
It's Clarence in Alabama.
You know what's a good show that my wife like watches the first episode with me and then she just binges it without me, which is I guess fine. Love is Blind.
Okay.
Best reality show on TV.
All right. Besides Wrexham, I don't watch any reality shows anymore. So, but okay. Thanks to Duncan as always for producing, John for helping out on the videos, animalspiritspod@gmail.com, and we will see you next time.